The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. And the first chart that I've posted into Tiger TV today is the one for the VIX index. And as you can see, we've been down at this 786 level for several days. Basil covered this on his show as he was finishing up the importance of this level at around 16, and then if it gets above 18. Folks, I've been looking for the similarities between the 1987 market and the market that we have right now, the market that we had into October of 1987. That similarity is good if you look at the New York Stock Exchange Index, which I've also posted into Tiger TV. We have not made a 61% retracement yet in the New York Stock Exchange Index. However, we've made a 786 retracement in the NASDAQ, a 786 retracement or better in the Dow Jones, and then also in the S&P 500. So those 630 stocks have gone above the numbers that we usually watch. The overall market has not even made the 61% retracement. In order for this scenario to work, the market has to top today. We made a 3-drive to a top pattern in the overnight market last night in both the Dow Jones Industrial Average. We did it also in the S&P 500. And those were the three that, the NASDAQ also did the same thing, but they made a beautiful 3-drive pattern on the hourly charts at that time. And they certainly looked like that was the spot that they were getting ready to turn down from. Now, much of the things that I've based this on are the cycles that we watch. But, folks, there's I don't know how to say this other than it's a 50-50 chance that maybe that the Bradley model actually inverted back on October the 15th. I'm going to put that chart into the Tiger Den so you can take a look at it, because it really shows the possibility that could have happened. And if you'll give me 1 second here, I will put it up here and you'll be able to see the reverse of the one that we usually look at. This is the inversion of the market, and as you can see right around that 15th, we were making 3 major ratios there. We talked about this on the show. I'm sorry I missed last week, folks, but I had a horrible sore throat, and I'm just getting over it. And I'm going to have to miss Wednesday's show because I'm traveling, and then I should be okay for the remainder. But right now, we'll just get today's show out of the way. But on the 15th, we made that 61% retracement on the S&P and the Dow. We also made a 1-to-1 retracement off the April low, and we made a 1.618 expansion on the August the 5th low. That's how I try to determine where these cycles are coming in at. So as you can see, we had this big move coming in, and I thought possibly that last Thursday when we had the solar eclipse and new moon, that would be it. But the market didn't top until today. So if it did top today, and today's low in the S&P and the Dow Jones was exactly 61% retracement of the low we made on Friday. So the trend is still basically up. That's all you can really say, is that that's why it's happening. You don't know why the Bradley model inverted. If I knew that, I would I would have something pretty valuable. But you never know when it's going to invert. If you look at the chart, you can see these spots. I mean, you just look at the Bradley peaks and troughs, and they're very, very close, to the turning dates in the market. The problem is that inversion that occurs. We've tried weighting the patterns a little bit differently, but that doesn't make any sense because it just doesn't fit very nicely. Now, my co-author in the book, Shane Smolian, has some really good technical work that he's done with the aspects itself, and I wanted to put that into the mix here to show you. If you give me 1 second here, if I can get that done correctly. Oh dear, let me see. There we go. Hold on. There we go. This is what I want to show you. This is where we are with the aspects. These are based on what the Bradley's doing. And as you can see here, on the 25th and then again on the 27th when we made a higher high, we should be going down sharply into November the 13th. That's basically, what we're looking at. This is just the negative or positive valences of the planetary cycles that we look at. This was the work that was done by Dr. Barr at Yale University back in the 30s. That is held up through time. And that's a pretty good example of what we're doing. So we're looking at a potential major low here around November the 13th, if the top is in fact due coming in right now. If the Dow Jones had only made a 61% retracement and the S&P had only made, even 786 would have been okay, but they went above those numbers, folks. And when you look at what happened with some of the indices like the IBB, where it's made a 1.27 expansion, that's very, very powerful. Even the Dow Jones Transportation and the Dow Jones Utility, the Dow Jones Utility is making a butterfly top, it looks like, but the Dow Jones Transportation, we'll put the transportations in first, and you can see they also went sharply above the 786 retracement. We did make that profit objective that we were looking for. That was that jaws of death pattern that we're looking at, and they had three ratios. There again, you're seeing it the same thing in the transportation. You had the 61% retracement, you had a 786 retracement, and you also had a 1.27 retracement, all coming in here on the October, the 15th. So that's telling us that was. But if we go below that low, boys and girls, then the party is over. We'll see, what happens. But that held up extremely well, and it's rallied back very, very sharply. If we take a look at the utility index, you can see that this index has actually gone into new high. We made a 786 retracement on that one back on October the 15th, and now we've completed the ABCD to the upside, and we've made a butterfly pattern on the top here, if this is it. So there's still a possibility that this could happen, but not necessarily so if it closes really strong today. This is going to be the key thing to watch, in my opinion, because if the strength of this market takes us into new high ground, this tells us that solar eclipse cycle did not work, and it tells us that the Bradley model probably bottomed on the 15th, and that means we could go ballistic. The aspects that we're looking at say that's not going to happen, and all we've done today is we've done some beautiful Fibonacci retracements. The market backed off to a perfect 61% retracement off of Friday's low after we made the 3 drive pattern last night, and then we rallied up to the 61% retracement in the S&P. We rallied up to the 786 retracement in the NASDAQ, and thus far those markets have not taken those levels out. So if we close very badly today, and badly would mean the Dow to be down about 100 points or more, and the S&P down about 10 or 15, then that would tell us that, yes, that high that came in last night is a very strong cycle high, and we could be going down into November 13th. So the close today, I think, is going to be very, very important. It's a really mixed bag here because of the facts of where we are with the VIX. We pull back to the 786, and boy, if you think we had volatility, this is just starting, folks. That much I really believe. We're going to see volatility here that's going to make what's happened just recently look like kid stuff. That's the way it looks like to me, from a technical standpoint. It's certainly got all those earmarks there of something that's getting ready to really, really explode. We looked at several other things last week, and that was the IWM, which was actually the day that the market was bottoming. We had the Dow down about 200 points on the day, and the IWM, the small caps, was actually trading higher. Actually, was unchanged at the time, closed higher that day, with the Dow being down sharply, and now it's had a very strong rally. What's interesting now is that the rally that we're having now in the IWM is exactly the same rally in price that we had back in August. From August 4th's low to the high we made on September the 3rd, that amount rallied about 10%, and this is exactly what we've had so far in the IWM as we speak today. So both of those are similar moves. The $64 question is whether we're going to bust out of here to the long side, and I think today's close will tell us. If we close badly today, it looks like we're getting ready to make a pretty good correction into that November 13th date, and the Bradley model will still be okay. But you really have to pay attention to it because of the way that it hit that bottom on October the 15th. That was a very, very powerful point. If we take a look at the original Bradley model that we look at, you'll see that inversion occurred right at that time, and so all I'm trying to do is to see if that is really going to be that key, because it was such a powerful spot that you have to respect it. And the way that it came out of there, I mean, my God, it just ran, the Dow went, 600? Yeah, it ran almost 1,000. Yeah, it did. It ran 1,100 points in just 5 or 6 days, which is, great for volatility. But now we're coming into the spot where, the fat lady's either going to dance or jump on somebody's head, and we'll see if that's going to be the case. The key here today, I believe, is the close today because of the action that we've had, and we'll see what's happening. Okay, we've got a caller from North Dakota. Jonathan, are you there?
Yes, sir. How are you doing today?
I'm good. Now, Jonathan, we're almost ready for the commercial, so if we hit the commercial, you stay with us, okay?
Yes, sir.
You don't have to say sir. You can just call me old Larry, okay? Well, you don't have to say old. Just say Larry is good.
Okay, Larry. I sure appreciate you, all your advice and help. You sure are fun to listen to.
Well, thanks. I knew there was somebody out there that liked me. I thank you for calling in. I really appreciate it. And I'll send you that $20 just as soon as I collect it.
Okay. My question was, I was going to ask you about opening price on Forex. How do you use that, or do you use that?
Yes. Actually, I try to make it a point to be up when Forex opens, which is around 1 o'clock in the morning, New York time. Being old, we have a potential to use the facilities more than once or twice a night. So I'm usually up around 1 o'clock for just a few minutes, maybe 20 minutes at the most. And what I do is I watch the first opening ranges of the markets, because many times you're going to see major support or resistance, and that what happens at major Fibonacci points. It's rather important. That happened last night in the euro. We opened up, took out the high of the previous day, and then backed off 50 pips. But you just have to watch that, and then you watch the first hour of trading and take what that range is. Jonathan, stay with us here, and I'll cover the rest of this when we get done. Okay?
Okay, thank you.
Okay, you bet.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back with Jonathan from South Dakota. Are you still there, my friend?
Yes, sir, I am.
Good. Okay, I posted into Tiger TV, if you get a chance to take a look at it. It's a chart of the euro, a half-hour chart, and it shows the opening this morning in the euro, London time, where it completed a three-drive pattern. And that lasted for, well over 4 hours. The market came down and stopped exactly at the 61% retracement. And now what it's done is it went back above that number. And so you have several things going for you. You have the market is in a stronger trend now above the open, and it's showing that the euro is probably going to rally even further. Do you follow me?
Yes, sir. Sure do.
So all it's basically a guideline. You know, when I did that opening price book 30 years ago, it came from a work of Earl Haddady. Earl Haddady and Jim Sibbett were commodity guys way back in California and Pasadena back in the 50s and 60s, and I happened to know both of them. And one of my mentors was their neighbor, so I knew them quite well. And they had the original idea of the opening price, and my mentor, John Hill, and I started working on it in 1980, and that's when I started working on the book. John's son, still trades the opening price index in his hedge fund, but back in the old days, the markets opened at a regular time and closed at a regular time, but now, Jonathan, we have 24-hour markets. and it's a little difficult. And it was especially with Forex because it's open, 24 hours a day, 5.5 days a week. So you have to use something else. And the key to my opinion, of course, is the Forex market is the London Open, because London is the real Forex market. I mean, New York is big, but it just is very small compared to what they do in the UK. I've been to some of the Forex houses over there. Let me tell you, they are really big. It's nothing to see 500-600 traders in a room there. So it's a very, very large contingent of trading in Forex from London.
Yeah. That was my confusion there. I wasn't sure where you started your day, because it seems like the Asia markets, I have my most problems when I mess around when I try to trade that one versus
it's
the
difficult.
Other.
I don't do Asia at all. The number of times that I trade Asia, you could probably count on one hand in a year, and it's usually only if it's a big an extension or some type of a major pattern completing at that point. But frankly, I just don't see it very much, and I do try to sleep at least 2 hours a day, and that's usually when Asia is open. So I don't really follow the Asian markets too much. I follow the yen, of course, but not really during the Asian times. It's just not feasible for me.
Okay, that makes sense.
You get enough during London and New York to worry about Asia. That's the way I look at it. Whether that's correct or not, I don't know, but that's how I see it.
Okay, well, I sure appreciate your help, sir. And
okay.
One recommendation I have for you. Could you talk to Tom about maybe making your work day a little longer and put you on for 2 hours a day instead of one?
I'm sorry, but I didn't hear that. There's a lot of static on the line. I don't need any help with that. Thank you, though. I appreciate the thought, Jonathan. That's very nice of you. Okay.
I appreciate your help, and I appreciate your books, and I'm enjoying hearing, learning about the history of the market and different things you talk about.
You're really working to get that $20, aren't you?
Well, keep up the good work. I appreciate it.
Thank you so much, and a happy holidays to you too.
You too. Thank you.
Okay,
Bye-bye.
Thanks for calling in, Jonathan. Why can't all you guys be like that? I'd do this more often. Okay, getting back to the markets, I still think the key today is the S&P is if we get below that 1944 level, which was our 61% retracement off the low we made last Friday. We made I should put that 3-drive pattern in there because it's so pretty on that hourly chart. You really ought to take a look at it. We had one of our den folks, Mr. Marshall, call me to ring my bell about that, and he was certainly spot on the pattern, and you'll be able to see that. Let me just do this right now, and we'll get it in so you can take a look at it, and we'll be able to watch this pretty easily, and we'll see you'll see it unfold, and it makes a pretty nice little trend line. I hope that comes into the den okay. Let me know if it does, because it shows a beautiful parallel channel lines that we have that started back on the 22nd. We made the first top on the 22nd, the second top on the 23rd, and the last top was last night. So that makes really nice symmetry. The ABCD is just spot on perfect. So going below 1944 is going to be trouble in River City. Got to take a little break here. Market's still under a bit of pressure, but not much.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a caller from California asking about the price of gold, I believe. Audrey, are you there?
Yes. Hi. Good to have you back.
Well, thank you. It's good to be back. It's not good to be sick.
Sorry
but I'm doing much better. What can I do for you?
Yeah, I wondered if you'd just touch on gold and silver. I haven't heard you talk about it in a little while.
Okay. Basically, what I've done is I've posted into Tiger TV the daily gold chart. And Audrey, as you can see, back in June of last year, January of this year, and then also October of this year, we've hit that 1180 area, which is the 61% retracement on the long-term weekly chart from the high we made at 1932 per ounce, back in April of 2012. Mm-hmm. So we've held that really well. Now, we did rally to a 382 retracement just recently up here at 1256. And what we're doing now is we're in our fifth day of a correction. And so far, we're setting at a 382 correction here at 1229 per ounce. I think we're going to get down to about another $20 lower at around 1210. and that'll be the 61% retracement, and that'll be the key if we're going to hold here. Now, if we hold this level where we are right now at 1229 and turn up, then it's going to be quite bullish. But I'm trying to be patient here and wait for a correction. And the reason for that is this market has had lower tops for the last 18 months.
Right.
And it's just weaker and weaker. So you've got to, try to pick the shots the best you can. And I'd rather buy it lower than right here. If I were to buy it here at 12.29, I wouldn't risk more than $5 an ounce, because if it gets through there, I think we'll easily get down to 12.09, another $20 lower. Part of it, Audrey, is the silver. Oh, you're talking about a stock that looks dead. Let me pull that up for you and show you. I watch it all the time. Don't trade it that often, but I watch it because it's the poor man's silver or poor man gold. And I'm a poor man, so hold on a second here. Let me get this up here.
Yeah, that doesn't look too good, does it?
No. It's I would not. This thing has not had any rally at all. In fact, I focused on this in my notes to the hedge fund this week, and you'll see that we did make that butterfly pattern very nicely down there at that $16 per ounce level. But frankly, we've had no rally at all. It didn't even rally 5% off the bottom. And so all we've done so far is we've already completed a 61% retracement in the silver, you see. So, and I know it's not gold, but it's still a precious metal, even though it's semi-precious. I'm just being patient here. That would, my guess is, wait to see what happens at 12.09 in the gold. That's what I'm looking at.
I have a question. As gold hit that 1189 area again, it would have to go through it. You wouldn't have, or is there such a thing as a quadruple bottom? Well,
that's a very rare thing. Now, W.D. Gann didn't believe in quadruple bottoms. He believed the third test was the important one.
Right.
H.M. Gartley felt the same thing, that it was the third test. And, the number 3 is one of the most mystical of all numbers in sacred geometry. So if it breaks that, to me, that would tell us we're heading down to the 900 level in gold. And, we could easily do that. People don't realize when we had gold at 800, no one ever thought it would go to to 230 an ounce. Mm-hmm. It was in a 30-year bear market, so we could easily go down for another year, maybe even more. You don't know. These markets are very very fickle and very volatile, so you got to be really careful.
Mm-hmm. Okay, thank you.
It's my pleasure. Anytime.
Okay, you have I hope you feel better.
I feel better already. I'm starting to feel a little bit, raspy here, but I'm able to talk and I feel great. It's not a problem. I did happen to go to the doctor on Friday to get shots and stuff, so that, but it was fun. I have to tell you the story. The doctor that I go to is a really big sports fan, and he's a big fan of the San Francisco Giants, who are in the World Series, and I'm a big Giants fan, and we both had Willie Mays stories, and it was really fun going to the doctor. He kept me in there for 45 minutes, and when I got out, the nurse, oh, God, was she mad at me. She said, you put us back 2 hours. And then, anyway, that's what happened. So hopefully I don't see him that often.
All right. Well, you take care. And, again, I'm glad you're back.
Okay. Thank you so much for calling in. We appreciate it.
Thank you. Bye.
Yeah. You bet. Everybody that belongs to the TFNN family is always welcome to call in. And if you have any questions, it's 877-927-6648, and we'll be happy to answer them if we can. Let's get back to the bond market. The bond market, I think, has made a very significant bottom here. It appears to, anyway, just by looking at the longer chart. If you'll give me 1 second here, I will get it in here. We want to cover both bonds and notes because I believe, they're quite important here. But over the past several weeks, we had those really wild swings of $12,000 in the bonds. We've slowed down here. Last Thursday, we made a bottom at the 141 level. So far, we rallied a little more than a point and a half off that bottom. But that completed a major ABCD at that point. That was also a 61% retracement of a low we made on the previous week. So there were a lot of things to tell us that 141 should hold. I don't think it's going to hold for very long because I believe longer-term notes and bonds, look very, very suspect. If we take a look at the notes, the notes had a big move up, and then the move down, which stopped, as you can see, it made a perfect parallel channel line at the 61% retracement of the high we made back in 2012. That means we're still in a downtrend, i.e. higher interest rates. This was just a huge rally that surprised a whole lot of people, present company included. I thought it was going to rally, but I didn't think it was going to rally that much. But boy, did we have volatility. I had to pull all-nighters when that was happening because you don't get opportunities like that very often. And those hit those 618 retracements in the notes and 786 retracement in the bonds to the exact tick. So anybody that doesn't believe in, the numbers are sacred geometry and Fibonacci ought to take another look at them, because, boy, when big markets like that hit those numbers, they're yelling and screaming that they're at important points. So far the notes have come down and made a perfect Fibonacci retracement of 50% of the last low that we made. It also made a 382 retracement of the low from August of 2013. So that's telling us that these notes are, and the volatility is what's important here, folks. When the bond market swings $11,000 and $12,000 in 2 days, that's mom and pop stuff. That's not, these markets are many times bigger than the stock market, and these are the ones that you really want to pay attention to, because this is what's really causing the markets to jump around. I wanted to do a little quick review here on the junk bonds, because we had a big ABCD in the junk bond market, and it's rallied back to a 61% retracement. This is in a downtrend now, so you want to be looking to sell junk bonds on any rallies, which we've had recently, and that's something that I would be watching very, very closely also. Just a lot of things, and we should be watching a lot of things, because we have a lot of things happening cycle-wise, that tell us, where we are. Now, I've had a request for a couple of stocks to take a look at, and of course we have to look at Atlanta Charlie's favorite stock, and that is Priceline. And as you can see, after the ABCD has been completed in Priceline back on the 15th of October, we've had a very strong rally that so far has stopped right at the 61% retracement and the 382 retracement of the previous swings that we had. So whether this is going to be the end of it or not, we don't know, but that completes that ABCD pattern, and it also completes the minimum qualifications necessary for the rally. So that's the real key to take a look at. Now, they closed at 11.38 per share on Friday. I just want to check it for today, because I haven't done that as yet, and I just want to double check to see if that's held it or not. And we will take a look at Priceline right here, and we'll see that it's still, well, it's trading at 11.35 now, closed at 11.38 on Friday, so it's right in the ballpark of what we were looking at for that spot. Now, the next one that I've had a request to talk about, well, of course, is the most popular stock in the world, which is Apple Computer. And I don't think it's a computer anymore. I think it's Apple and everything, isn't it? Mother, God, and country stuff. But we've got a big pattern here completing in Apple. We'll put it up here. Just give me 1 second. I've got to make a little bit of a change. There we go. There we go. We can do it now. Hold on 1 second. And we'll show you the Apple is making a expansion move up here at the 105.24 level. We still haven't taken out Friday's high, but we're very, 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 very close to it. That's what we're looking at. But, it stopped right at, on October the 15th, Apple stopped exactly at the 61% retracement of the July low. It was a perfect Gartley pattern there at $95 per share. And so far, it's held that level really good. Now, the one that looks really interesting, if you like puts and calls, and I know everybody likes puts and calls, I don't particularly do, but we'll see, is Facebook. And this is the big company. And so it's already started down. I'll be darned. I wanted to show you this pattern because it's really interesting here at this $80 per share level. Give me 1 second here to put this in and take a look at it, because it is oh darn it. Give me 1 second here, and I have to draw this in, because we've completed this pattern now. and I wanted to show it to you so that you can tell your friends. Shucks. Give me 1 second. This only take 1 second. There we go. Get rid of this. I'm just trying to highlight it so we can see it a little better. And then we'll be okay. Hold on. There we go. There we are. Aha. Okay. Now this is Facebook. Oh, dear. I've got a new... Hold on a second. There we go. Get that out. I have to move things around in order to post the charts into the room, and hopefully that'll do it. You'll be able to see that we've completed a 5-point reverse wave now in Facebook. That makes it spot on to a potential sale up here at this $80 per share level. That could be, another indication that maybe the stocks are turning, but that's only one stock. You can't really do very much, with that. So that's the main thing that we're, watching is just look at. I have a request for the stock, so I take a look at it. I don't trade Facebook. In fact, I almost never trade a stock. It's just too much fun being in foreign currencies and, some of the commodities that we have. So it's much better to do that than to mess around with Facebook. One other question that someone asked me about the Bradley model is the percentage on the Bradley model. And believe me, we've got a lot of samples because we've looked at this since 1875 was the first good data that we had 10 years after the Civil War. And we know that it's about 70% accurate. The trading dates of the Bradley model, in other words, where you see the crests and troughs of the Bradley model, they're much higher. They run in the neighborhood of about 80% of calling, a major turn in the market. And when you stop and think that this thing is done, years and years in advance, there must be something to it. That's the whole key. I don't know the answer, folks. I wish I did, but I don't know, the answer behind it. All I know is that it's very, very important, and I don't think anybody will ever find, if there is a Holy Grail out there, the Holy Grail, I think, is between your ears, because if you can understand the cycle between your ears, the rest of the stuff isn't that difficult. So keep that in mind when you're doing your trading, that's for sure. So that's the main thing. Now, we have a commodity that we need to talk about right now because I'm not going to be on the show Wednesday because of travel, as I mentioned before, but we've got a potential for a potential pretty good bottom coming here in crude oil. And if it doesn't hold, that means that we're going to be looking at much, much lower prices in oil for a very, very long time is what it looks like to me. Now, as you can see, I'll put this into Tiger TV so you can take a look at it here. And there we go. And you'll be able to see that we've made a 3 drive to a bottom here in crude oil today. It was a perfect ABCD off of the last 5 days price action. That came in right at 79.30. The old low that we had back on the 15th was 79.05. So that makes it a double bottom. Any move below $79 an ounce, folks, is not good. That means that this market is probably going to go down, a great deal lower if we go below 79. It just has a lot of support there with that pattern that's completed, and you want to be able to, use that as your thing. I wanted to cover part of that again when we come back, and we'll be back right after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and I've also posted into Tiger TV the chart of gasoline futures. And as you can see from the low that we made back on October 15th, which was 2 weeks ago, we've tried the 210 level several times. Haven't gone below it yet, so you can see where we stand here. Any weakness here in gasoline or crude oil from these levels means that we're going to be looking at much lower prices. We have gasoline here in Tucson is selling for $2.87 a gallon. That's a 4-year low for us here, and it's very nice to see gas back to where it was. I can remember when I got out of college, when I was in Texas, El Paso, Texas, With they having gas wars at that time, and I paid 11 cents a gallon for gas. It cost me less than $1 to fill up my little Volkswagen Bug. I had a 1960 Volkswagen Bug, and it cost less than $1 to fill it up. So those are long memories, but come a long way since that time. I also remember going to wait in line during the 70s when we were in the Iran crisis in the late 70s, where you had to wait in line to get gasoline. You could only buy it on odd or even days based on your license plates and stuff in California. But fortunately, the guy that owned the station was a family friend, and I would get my gas off hours, so I didn't have to wait in line. But those were not fun days. That's absolutely for sure. Keep in mind, folks, that the close today is very, very important in the stock market, in my opinion. If we close below that 1944 level in the S&P, that would be the first sign that there's problem, that this top that we had Sunday night really is going to be significant. Remember, we did not make the 61% retracement in the New York Stock Exchange Index. The Russell 2000 really didn't rally very much at all. It was just a perfect retracement from the last rally that we had. So it's only the three indices, the Dow, which is 30 stocks, the NASDAQ, which is 100, and then, of course, the S&P, which is 500. So remember, with the words of Thomas Jefferson, and relate it to the markets, any government that can give you everything you want has the ability to take it away from you. And that's true of both markets and governments. So the market that can go up 300 can come down 300. And you know that it comes down harder than it goes up because fear is a greater emotion than greed. So be very, very careful in here. Be nimble, as Art Cashin always says. And that's what you should try to do. That way you can have more chips on the table when you finally catch one of these, big moves that, keep going and going and going and going, whether up or down. So we are at critical levels here this week, as along the last of the positive aspects occurs on Wednesday, the 29th. And then after that, there are nothing but negative aspects into November the 13th. I'll be on the show Thursday with the commodity report. And we've had some, big breaks after we completed the Gartley patterns in the corn and soybeans. And whether that's going to be start of a much bigger break or not, we'll have to wait and see. But that's what we're watching right here now, is where we are in the commodity markets, with gold and silver still under a great deal of pressure, and even copper is still under a great deal of pressure. It's almost ready to break under $3 a pound also, which tells us that the emerging markets that we look at, even those markets have been able to rally virtually nothing at all. While we had this 1,000-point move in the Dow Jones, we've had virtually nothing happen in the emerging markets. That's it, folks. Live every day in an attitude of gratitude, and may God bless, and be sure that you take care of someone who has a lot less than you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.